Hello and welcome to this video about The Warren Buffett Way by Robert G. Hagstrom. Warren Buffett is known around the world as one of the most successful investors in history, and his investment strategies have been studied and emulated by countless people. In this book, Robert G. Hagstrom takes a deep dive into Buffett's approach to investing, revealing the principles and strategies that have made him so successful. In this video, we'll explore the key insights from the book, including the steps and principles that Buffett has used to achieve long-term success. We'll also look at some examples from the book to illustrate those concepts and help you better understand how you can apply them in your own investment strategy. So if you're interested in learning more about Warren Buffett and his investment philosophy, you're in the right place. Let's get started. Warren Buffett's investment philosophy is grounded in the concept of value investing. Value investing involves finding companies whose stock prices are undervalued relative to their intrinsic value, and investing in those companies for the long term. Buffett looks for companies that have a strong track record of earnings growth, stable cash flows, and a competitive advantage in their industry. He also looks for companies that are trading at a discount to their intrinsic value, based on his analysis of the company's financials and future growth prospects. The idea behind value investing is that the market can sometimes undervalue or overvalue a company, and that by buying stocks at a discount to their intrinsic value, investors can achieve superior long-term returns. Buffett has famously said that his favorite holding period is forever, which underscores his commitment to investing in high-quality companies for the long term. So, if you're interested in value investing, The Warren Buffett Way is a great resource to learn more about how to identify undervalued companies and build a successful investment strategy based on that philosophy. One of the key principles of Warren Buffett's investment philosophy is the concept of competitive advantage. A competitive advantage is a unique attribute that allows a company to outperform its competitors over the long term. Buffett looks for companies that have a sustainable competitive advantage, meaning that they have a business model or product that is difficult for competitors to replicate. This could be a strong brand name, a patent, or a proprietary technology that gives the company an edge in its industry. By investing in companies with a sustainable competitive advantage, Buffett believes that investors can achieve long-term success. These companies are more likely to maintain their profitability and market share over time, which can lead to strong returns for investors. In The Warren Buffett Way, Robert G. Hagstrom explains how to identify companies with a competitive advantage, how to evaluate the strength of that advantage, and how to incorporate that analysis into your investment decisions. So, if you're looking to build a successful investment strategy based on the concept of competitive advantage, this book is an excellent resource to help you get started. Another key principle of Warren Buffett's investment philosophy is the concept of the circle of competence. The circle of competence refers to the idea that investors should focus on investing in areas where they have expertise and understanding. Buffett believes that investors should only invest in companies that they understand and are able to analyze. By focusing on companies within their circle of competence, investors can make better investment decisions and avoid making costly mistakes. In The Warren Buffett Way, Robert G. Hagstrom explains how to identify your circle of competence, how to expand it over time, and how to use it to evaluate potential investment opportunities. By staying within their circle of competence, investors can avoid investing in companies that they don't understand and can't analyze effectively. This can help reduce the risk of investing in companies that turn out to be poor performers or scams. So, if you're interested in investing based on the concept of the circle of competence, The Warren Buffett Way is a valuable resource to help you develop a successful investment strategy. Another important principle of Warren Buffett's investment philosophy is the concept of margin of safety. Margin of safety refers to the practice of investing in a company with a significant margin of safety between the stock's market price and the estimated intrinsic value of the company. Buffett believes that by investing with a margin of safety, investors can reduce the risk of losing money on their investments. This is because the margin of safety provides a buffer against unforeseen events or changes in the market that could negatively impact the company's stock price. In The Warren Buffett Way, Robert G. Hagstrom explains how to calculate the intrinsic value of a company and how to determine an appropriate margin of safety for that company. He also provides examples of how to apply this concept in real-world investing scenarios. By investing with a margin of safety, investors can improve the chances of achieving long-term success and minimizing their risk of losses. This is an important principle of Warren Buffett's investment philosophy, and one that has helped him achieve remarkable success over the years. So, if you're interested in incorporating the concept of margin of safety into your investment strategy, The Warren Buffett Way is an excellent resource to help you get started. Patience and discipline are two key traits that Warren Buffett believes are essential for successful investing. Buffett is known for taking a long-term approach to investing and holding his investments for many years, even decades. In The Warren Buffett Way, Robert G. Hagstrom emphasizes the importance of patience and discipline in investing. He explains how Buffett's approach to investing involves careful analysis and research, followed by a long-term commitment to the investment. Buffett believes that it's important to have the discipline to stick to your investment strategy, even in the face of short-term market volatility or fluctuations. By maintaining a long-term focus and avoiding the temptation to make impulsive decisions based on short-term market trends, investors can achieve better results over the long term. In addition, Buffett also emphasizes the importance of patience in investing. He believes that it's important to take the time to thoroughly analyze a company before making an investment decision. This requires patience, discipline, and a willingness to wait for the right opportunity. So, if you're interested in adopting the patient and disciplined approach to investing that has made Warren Buffett so successful, The Warren Buffett Way is a valuable resource to help you develop those traits and incorporate them into your investment strategy. In addition to outlining the key principles of Warren Buffett's investment philosophy, The Warren Buffett Way also provides numerous examples of how these principles have been applied in real-world investing scenarios. For example, the book describes Buffett's investment in American Express in the early 1960s. At the time, American Express was facing a scandal involving one of its subsidiary companies. Despite this negative news, Buffett recognized that the underlying business of American Express was strong and that the scandal was likely to be temporary. By investing in American Express at a low price, Buffett was able to benefit from the eventual recovery of the company and the resulting increase in its stock price. This investment demonstrated Buffett's commitment to investing with a margin of safety and his ability to identify high-quality companies with long-term potential. Another example described in the book is Buffett's investment in Geico, an auto insurance company. When Buffett first invested in Geico in the 1970s, the company was facing financial difficulties and its stock price was depressed. However, Buffett recognized the company's strong brand and its competitive advantage in the auto insurance industry. By investing in Geico at a low price and holding the investment for many years, Buffett was able to benefit from the eventual recovery of the company and the resulting increase in its stock price. This investment demonstrated Buffett's patience and discipline as an investor and his ability to identify undervalued companies with long-term potential. These are just a few examples of the many real-world investing scenarios described in The Warren Buffett Way. By studying these examples and understanding the principles behind them, investors can gain valuable insights into how to apply Warren Buffett's investment philosophy to their own investment strategies. In conclusion, The Warren Buffett Way, by Robert G. Hagstrom provides valuable insights into the investment philosophy of one of the most successful investors of all time. By outlining key principles such as value investing, competitive advantage, the circle of competence, margin of safety, patience, and discipline, the book offers a comprehensive guide to successful long-term investing. In addition, the book provides numerous real-world examples of how these principles have been applied in actual investing scenarios, offering valuable lessons for investors looking to improve their own investment strategies. Whether you're an experienced investor or just starting out, The Warren Buffett Way is an excellent resource to help you develop a sound investment strategy and achieve long-term success in the stock market. By following the principles outlined in the book and studying the examples provided, you can gain the knowledge and confidence needed to make informed investment decisions and achieve your financial goals.